And Cairn India rallied in trade today after the oil explorer said its board will meet next week to consider a proposal to buy back shares from its public shareholders. Remember, ET Now was the first to tell you this sometime back. In fact, the promoter of the company had come out and spoken on ET Now about the buyback plans of Cairn India. Ajay Sharma gets us all the details of this development. Tell us, Ajay.
Well, that's correct. It's official now. November 26th is when the board of Cairn India will consider a buyback and the quantum of buyback and the probable price as well. We understand that 18,000 crore, which is the total cash equivalent, which is on Cairn India books, part of that will be utilized in order to buy back shares from the various stakeholders, including promoters, which have around 112 crore shares out of the 191 crore shares, the total equity. Around 48% is what the public shareholding pattern shows up. Around 10% of that includes the PLC, the Cairn PLC, which was the earlier promoter of Cairn India. Now remember, the objective of this particular buyback is in order to reduce the number of shares and boost the EPS, at the same time utilize a big amount of cash which is on the balance sheet. In process, also perhaps buy back the PLC, the Cairn PLC's share, which has been like a hanging sword for the company and has been an overhang on the company's balance sheet. The supplies from there always lead to a big correction in the stock price. Also, one needs to take into account that with the announcement now official, there will be a floor which will be automatically given by the market to the stock price, which has actually lagged its sector peers past couple of years. Last year, of course, Reliance also did such an exercise, and that also helped in keeping a floor to the stock price. So analysts believe that this may not lead to a very sharp jump in the stock price going forward till an announcement comes for the stock price for the buyback, but at least a floor will be in place. Also, the new buyback norms, which say that 50% of the offer announced should be taken up by the company if the offer is not subscribed healthily. That also bodes well for this particular buyback because of the large size of cash on the books, and hence analysts believe that the price of the buyback may not be very high from the current market price.